Welcome everybody to the first webinar in English organized by taxx in partnership with Lalux insurance company. At the beginning, I just wanted to inform you that at the end of the session, there won't be the possibility to ask questions because we have over 200 people registered for this webinar, and I think it will take the entire afternoon to answer to all your questions. However, of course, if you can contact me by email with any question you have regarding your tax return in general or tax optimization in particular. So let me introduce myself. My name is Patrick Malger. I am one of the founders of taxx, an online platform that allows you to make your Luxembourgish tax return a child's play. taxx is online since 2018, and last year more than 10,000 taxpayers take advantage of our services to file their tax return. However, let me start with some bad news. I am not a tax expert. Let me explain. The idea for taxx came up because I was lost with these 20 pages of tax return a few years ago. Since then, I learned a lot about taxation, and luckily I have a good team which knows far more than I do. So good news for you, not being a tax expert allows me to present you the Luxembourgish tax system in a more comprehensive way than a real tax expert would do. At least I hope so. Let's have a look what I have on the tax menu for today. So let's start with a quick overview of the Luxembourgish taxation systems for individuals. We won't go into the details, but it is important to have an overview in order to better understand how you can save on taxes. For the main course, we will talk about possible tax optimizations, what are the main products, how does they make you save taxes, and at the end, I will show you quickly how taxx can help you better understand how tax optimization would work for you. So let's start with the funniest part. 20 pages of tax return. No worries. We will not analyze page by page to have a look what you have to put in each field. This is not that kind of webinar, and I hope it was not what you have expected. So who has to file a tax return in Luxembourg? A tax return is not mandatory for everyone. There are different rules in order to determine if a tax return is mandatory or not. The most important criteria are the following. However, this list is not exhaustive. If one of these statements concerns you, you must complete a tax return. So if you have a taxable income over 10,000 euros, if in your household there is more than one income, for example, if you and your spouse are both getting a salary, more than one salary, so a tax return is mandatory. And of course, a tax return is also mandatory if you get income that has not been taxed already, for example, rental income from the apartment that you are renting out, or capital gains on sale of real estate, and so on. So even if a tax return is not mandatory for you or your employees, your colleagues, your friends, it could make you save taxes. Knowing that almost half of the taxpayers in Luxembourg don't file a tax return, nevertheless, they could lower the taxes by deducting different types of charges. So it makes sense to have a closer look and to file a tax return in order to get some money back. So on what depends the amount of taxes you have to pay? Basically, there are two factors, your taxable income on one hand, and on the other hand, the tax class you are in. So taxable income, how is it determined? But basically, your taxable income depends, of course, on your income, like salary, rental income, capital gains, and so on. And to determine the taxable income, you can deduct what is called special expenses. Under these special expenses, you have your social security contributions, insurance premiums, debit interest, home saving plans. We will take a closer look today to the different kinds of special expenses that exist. And of course, the higher your special expenses, the lower your taxable income. And even if its name says taxable income, that is not yet the amount your taxes are calculated on. There are also allowances that are deducted from the taxable income. to get the adjusted taxable income. Allowances can depend on your situation. We will see in a few minutes a few examples. And at the end, you will have the adjusted taxable income, and on that amount is calculated the taxes you will have to pay. So as a conclusion, and in order to lower your taxes, that is the amount that you have to lower. To do so, there are basically three possibilities. First would be to lower your income. This seems not to be so a great idea, except if you love salary reductions. More interesting would be to raise your special expenses or to raise your allowances. And the final goal always is to lower your adjusted taxable income to save on taxes. Second factor on which one your taxation depends is your tax class. Basically, there are three tax classes in Luxembourg, depending on your family situation. So if you are a single without kids, you are tax class 1. If you are single with kids, you are tax class 1A. And if you are filing your tax return jointly with your spouse or your partner, then you are tax class 2. Important to say that for married couples, a jointly taxation is standard. However, if you are in a registered partnership, you can, through your tax return, ask for jointly taxation. Only condition, you have to be in a registered partnership from 1st of January to 31st of December of the year you are filing the tax return. So for example, if you get into a registered partnership end of this year, the first tax return you can do together would be the one for 2022. So we have seen that your taxation depends on your taxable income and your tax class. Let's have a closer look on calculations without going too much into the details. So in Luxembourg, we have a progressive tax rate system with tax rates going from 0% to 42%. And on top of that tax rate, there's a surcharge for the employment fund, depending on your tax class and your income. For example, if you are a single with a taxable income under 150,000 euros, then your surcharge is 7%. So at the end, the highest tax rate that exists in Luxembourg is 45.78%. So at that level, you pay around 45 cents per euro you earn more. And in the same logic, for every euro you lower your taxable income, you save 45 cents in taxes. We will come back later to that. So let's have a look at an example. So what does a progressive tax rate system means? Imagine a single with a taxable income of 50,000 euros. What is important to understand is that the 50,000 euros are not taxed at 39%. The first 11,000 euros are taxed at 0%. So the first 11,265 euros everyone earns per year are tax-free. The next tax bracket from 11,265 euros to 13,137 euros, so 1,872 euros are taxed at a tax rate of 8%. So on these revenue, you have to pay 150 euros in taxes, and so on and so on. And in our example, the taxable income enters the tax bracket of 45,897 euros to 100,000 euros, which is taxed at 39%. So we are paying the highest rate only on the 4,103 euros from 45,897 to these 50,000 euros. So the total tax to pay is 9,106 euros. And as seen as a few minutes ago, you have to add the employment fund surcharge, 7%. And at the end, you will have to pay 9,743 euros on a taxable income of 50,000 euros. So your average tax rate on that income is around 19%, far less than the 39% you pay on the last euro you earned. So in order to save on taxes, you have to lower the taxable income, because at the highest tax brackets, you pay the highest taxes. So what are the possibilities to lower your taxes? You cannot do a lot on the tax class side. except maybe marrying someone. So you have to work on the taxable income. And this is what we are doing when we are talking about tax optimizations. So let's come back to our example of a single with a taxable income of 50,000 euros without any tax optimization. He has to pay 9,743 euros in taxes. So now let's assume that he is deducting 4,000 euros on his tax return. And in that case, his taxable income would be 46,000 euros instead of the 50,000 euros at the beginning. So the question is, how many taxes does he have to pay now? Let's come back to our calculations. So only thing which changes is the last tax bracket. It does no longer goes up to 50,000 euros, but only to 46,000 euros. So the tax rate of 39% no longer applies to 4,103 euros, but only to 103 euros, which makes a huge difference in taxes. So at the end, with these 4,000 euros deductions, there are only 8,075 euros in taxes to pay. This means that the deduction of 4,000 euros allowed to reduce taxes about 1,669 euros. So the goal of tax optimization is to lower the taxable income in order to reduce your taxes. So what are the options? Basically, you can work on two categories: special expenses and allowances. In this webinar, we will take a closer look into the special expenses, where we can find expenses like interest you pay on your loan, insurance premiums, pension plans, and home saving plans. Allowances also allow you to lower your taxable income. Here you have, for example, costs for childcare, like the crèche or the maison relais, but also costs for cleaning your home. This could be, for example, also the invoices from a cleaning company. There are extraordinary charges that could be deducted. For example, if you have lawyer costs due to a divorce, or you can deduct, for example, the acquisition of a bicycle. So let's have a closer look to the special expenses. One category of special expenses are debit interests on loans and insurance premiums. So important to know is that for every deduction, there are maximum amounts. Most of the time, this maximum is taking into consideration the number of people in your household. And in this category, for example, the maximum is 672 euros per person living in your household. So for example, a family with 2 kids can deduct up to 2,688 euros per year in that category. I consider there's debit and interests, for example, the interests you paid on a consumer loan for a car, for example, but also interests on the credit cards or overdraft interests on your bank account. On the insurance side, the most common deduction would be a car insurance, probably. However, life insurances and medical insurances are also deductible. Let's have a look at 2 insurances from our partner Lalux. For example, the life insurance Lalux Education is meant to prepare the future of your kids on one hand, and also to protect them in case of death of one or both of the parents. You could, for example, invest 100 euros per month over 10 years. 10 years is important because in order to deduct such an insurance, the minimum for such a contract is 10 years. So if after 10 years, both parents are alive, the kid will receive every 3 months during 5 years a certain amount. In this example, minimum 438 euros that the kid can use, for example, to finance his studies. And over 5 years, the child will receive a total amount of 8,760 euros. In the worst case scenario of a disease of one of the parents, the child would receive, for example, an amount of 52,500 euros if one of the parents would die through a car accident. And if both parents would die through a car accident, the child would receive around 105,000 euros. tax gains over the 10 years for this example would be up to 5,500 euros. And of course, these contracts depend on your personal situation and your age. So if interested, just contact me if you want to get a simulation for your family. Another possibility would be a complementary health insurance, which covers most of the medical bills that are not reimbursed by the public healthcare system, CNS, for example. So basically, with such an insurance, you can get reimbursements on doctor visits, hospital stays, glasses, dental care, osteopathy, and a lot more. And on top, there's also travel insurance, which could be very interesting if you have any medical issues when you are abroad. So get back to me if you want to have more information and a quote to cover your entire family. There's one insurance that is quite special on tax return, an outstanding balance insurance for your mortgage. So basically, this insurance is covering your mortgage in case of death, so you can protect your family for the worst case scenario. These insurances can be paid annually or by one single premium at a subscription. So this is important to know because it makes a huge difference on your tax return. If you pay the premiums per year, then the premium falls under the normal maximum deduction, so it will be added to the other insurances. And very often with car insurances and complementary health insurance, you are already over the deductible limit, so you won't get any tax savings out of that outstanding balance insurance. However, if you pay the entire insurance at the subscription by a one-shot payment, then the maximum deductible limits are much higher. So for example, a family with a 40 years old father, a 38 years old mother, and 2 kids can deduct up to 25,000 euros that year. So basically, that maximum deductible limit depends on the numbers of persons in your household and the age of the parents. So let's have a look at an example with a family having a taxable income of 120,000 euros a year. If they would deduct a single premium for such insurance, the taxable amount would only be 95,000 euros, and they would save around 10,500 euros in taxes. So you could, for example, cover a 600,000 euro mortgage with such an insurance, and thanks to the tax gains, the insurance would only cost you 14,000 euros, 14,528 euros, thanks to the tax gains you will get. One thing which is good to know is that these single premiums can be deducted every 5 years on your tax return. So let's imagine, for example, you bought your home 5 years ago and protected half of your mortgage at that time with an outstanding balance insurance. So 5 years later, you could cover the other half of that mortgage and benefit again from these tax cuts. This is quite interesting to cover your entire mortgage and to protect even more your family in case of death. Another category of special expenses is pension plan. So a pension plan allows you to build up additional savings for your retirement. So you can deduct up to 3,200 euros per person in your household. And in this category, the kids are not counted to determine the maximum deduction. So a family with 2 kids can deduct 2 times 3,200 euros, a total of 6,400. And as an example, for a family with a taxable income of 120,000 euros, this would mean a yearly tax savings of 2,670 euros. The money in this pension plans can be invested on the stock market through different investment funds. And at the age of 60, even if you are not already retired at that moment, you can get the money out of the plan. And at that moment, it will be only taxed at half of your average tax rate. So in our example, with a taxable income of 120,000 euros, that would be a tax rate around 10%. Another important condition is that the pension plan has to run for at least 10 years. So if you want to start such a plan at the age of 55, you can get the money out at the age of 65. So because it has to run for at least 10 years. Last moment to subscribe to such a product would be at the age of 64, because the payment, the end of the contract has to be reached latest at the age of 74 years. Interesting to know also that in case of death, the money goes directly to the kids if there are any. So it's also a good way to put some money aside for the kids, also for the worst case scenario. So our partner Lalux is offering such plans called Easy Life Pension. And in order to give you an idea about how much you could get out of such a contract, you can see here two examples. If, for example, you would invest 100 euros per month during 25 years, you could get around 60,000 euros at the end of the contract. However, if you would like to go to invest the maximum 266 euros per month, you could get out almost 160,000 euros after the 25 years. And these are, as I mentioned already, taxed at half of average tax rate. So in our example, it was around 10%. Just contact me if you want to know more, and if you want some simulations based on your situation and your age. Last possibility I want to present you is the home savings plan. So maximum deduction here depends on the number of family members in the household and the age. So if you are between 18 and 40 years old, the maximum deductible limit will be doubled. So for example, a family with a 40 years old father and a 38 years old mother and 2 kids could deduct up to 5,376 euros. And with a taxable income of 120,000 euros, they could save up to 2,253 euros in taxes. After 10 years, you can access the savings, but it is important to know that you have to use them for the acquisition or the renovation of your home. Or if you are already, if you don't have a renovation plan for your home, you can also use it to pay back on an existing mortgage. That's another possibility. So you can see that tax optimization really depends on everyone's individual situation. There are two possibilities to have more information about your personal possibilities. You can just contact me by email, or you can use the help of taxx to get more information on how to reduce your taxes. So let me present quickly what taxx can do for you. So taxx is online for 4 years now, and we help people file their tax return in Luxembourg. So basically, you create an account and follow the different steps to complete your tax returns. The forms are available in English, and you have a feature called auto scan, where you can upload your tax certificates, and our system will automatically import the data from these certificates. This feature will even be improved next year. And at the end of the process, you can download the official tax return, which is only available in Luxembourg in French or German, and you will get information about possible tax optimizations. So I will just show you how this is on our website. So basically, after completing your tax return on taxx, you can have an analysis about your situation and about your tax optimization options. The system calculates for you what we call an Opti score. So basically, it's a score from 0 to 100. 0 means that you have no deductions at all for the moment, that you have a big potential to lower your taxes. And 100 means that you are deducting all the maximum limits and that you are good. You can find there some videos explaining how tax optimization works, and you see exactly how much taxes you could save in your personal situation. So based on your family situation and also based on your revenues. You can have more information for the different products. You find videos for every product we are offering on our website. And you also find a simulator. So basically, you could simulate if, for example, you are opting for a pension plan with an investment of 100 euros per month, you can see right away how much your tax gains would be. So until now, this feature was only available for taxx users, and this week we launched a new simulator. A new simulator allowing also non-taxx users to get the same information out of their tax return. So basically what you can do, you can upload your PDF file from your tax return, which you maybe did on your own, or maybe you got them from a tax expert or fiduciary. You just upload the PDF, and basically after 2 seconds, you will have the same information than taxx users. So we are calculating your Opti score. You can see how much taxes you could save. You find the exact amount that you can save in your situation, and you can get in touch with us to have a better understanding of how you can optimize your situation. And we can also offer you the different products I just presented in this webinar. So we are already at the end of the webinar. Thanks a lot for watching. I hope you learned something about taxation in Luxembourg. If you have any question, or if you want to have more information about the different tax optimization products, just contact me by email. And don't forget to test our new simulator under taxx.lu/simulator. Enjoy your day, enjoy your meal, and thank you for watching. Have a nice day. Bye-bye.